What's good, everybody? Thanks for stopping through to check out the video today. This is going to be a short one.
You said no and the lie detector test determined Ralph.
That was a lie.
We just got 3 articles to cover today. First up, you see it on the screen already, is the US-Japan digital trade agreement. And then we got some easy ways to make money in crypto without trading. And then Coca-Cola getting into NFTs. If you're new here and you like what you're listening to, like, comment, subscribe, and share. And we're going to get right into it. So, the US-Japan digital trade deal should include crypto, says the American think tank. Analysts at the RAND Corporation say crypto as part of bilateral digital trade could lay the groundwork for cryptocurrency adoption. We got the Japan flag, the American flag, with all the binary in the background there. This one ain't as interesting as what we normally get out of Cointelegraph, but the article is a little short. So Sale Lilly, however you pronounce that, and Scott W. Harold of the American policy think tank RAND Corporation have called the United States and Japan to include crypto in the bilateral digital trade agreement between the two nations. How many of y'all actually knew we had a bilateral digital trade agreement? I didn't know we had. Did y'all know we had a bilateral digital trade agreement?
Hell no! The hell on.
I didn't. In an opinion piece published in the Nikkei Asia on Wednesday, RAND Corporation analysts put forward arguments supporting their clamor of crypto to be part of the digital trade deal. Every time somebody say RAND Corporation, I think of Iron Fist, man. I don't know what's wrong with me.
Whoa, whoa. Hold him.
Guys, I just want to talk to Harold.
No.
According to the article, the fact that both nations play host to 2 of the largest crypto markets in the world makes the exclusion of cryptocurrencies from the trade deal somewhat surprising. The US-Japan Digital Trade Agreement of 2019 does not include crypto or blockchain technology. However, the article stated that some parts of the agreement might cover non-financial aspects of the novel technology. So basically just saying that there's crypto that do more out here than just handle finance and transactions. You got things like VeChain, you got ADA. There's so many pieces outside of just the financial items. So make sure you looking for different kinds. We've talked about how crypto's getting into sports, and there's all different kinds of crypto that do more than just run transactions. So just keep that in mind when you're out hunting. As such, the analysts proposed 2 possible solutions. Oh, we're getting ahead of ourselves here. My bad, y'all. By excluding crypto and other blockchain-based financial applications, the policy think tank analysts said that unnecessary tariffs could burden businesses in the market. It just means they're going to run into taxes that are unexpected because things aren't allowed to happen a certain way. As such, the analysts proposed 2 possible solutions: negotiating a separate agreement on cryptocurrencies or redefining the terms of the 2019 document to cover digital currencies and blockchain technology. By adopting either measure, the analyst stated that such a move could set a precedent for clear-cut adoption of crypto and blockchain technology in international trade, especially in the digital trading arena. According to the U.S. Bureau of Economic Analysts data, America's digital economy grew to $2.1 trillion in 2019, almost 10% of the country's gross domestic product. That's wild, man. The role of crypto, digital currencies, and blockchain technology in international trade is becoming a focal point for industry stakeholders. Back in March, the U.S. investment bank Citigroup stated that Bitcoin was at a tipping point in international trade. The advent of central bank digital currencies, CBDCs, especially regional CBDCs, aka USDC, is also part of the conversation around digital currencies and cross-border trade. So that's talking about what who's going to be the sort of currency of reserve for digital trade. What CBDCs are going to be used. So that's also part of the big battle going on right now. So I just wanted to leave you with that. That's for those for the crypto doubters who click on the video and want to leave a negative comment. We took care of y'all first. So the digital trade deals are discussing crypto. So if y'all don't think it's real, just go ahead and click off. Now we're gonna get into the 5. This is by Jordan. And sorry, I normally mean to shout these guys out. I don't know how to pronounce most of the names though, so I mess them up. Osato Avant Nomayo, maybe, and Jordan Finseth brings us 5 easy ways crypto investors can make money without needing to trade. So, want to get paid to hodl? Here are 5 easy ways crypto investors make money without trade. Now, again, I'm gonna leave all these links in the description of the video. Somebody told me I should just start leaving them in the pinned comments. I haven't even done pinned comments yet, but I'll figure out how to do it. And if I do, for this video, I'll leave them there. So, look at them planting crypto seeds. Y'all get that? We ain't even gotta do a deep dive on that one, y'all. Large price jumps and 100x gains get a lot of attention from pundits and influencers in the cryptocurrency community because they offer people the hope of overnight riches. Ain't that some shit? In reality, these opportunities are few and far between. Not to mention, only a handful of traders actually manage to catch these waves and cash out in time to lock in life-changing money. Fortunately, catching a large price surge is far from being the only way for crypto investors to make a buck. In the recent rise of decentralized finance, non-fungible tokens, and the slow march of mainstream crypto adoption provides a near endless stream of investment opportunities. Let's have a look at 5 different ways crypto holders can make an easy buck without actually having to trade. So, staking. Y'all know I talk about staking all the time. This is my number 1. Staking, which rewards users for locking tokens on a protocol as collateral for a transaction validation, is one of the best ways to earn a yield on assets held in a crypto-based portfolio. In August, the Ethereum network will switch from a proof-of-work consensus model to a proof-of-stake model after ETH holders who stake in the ETH 2.0 contract can earn up to 5.83%. So that's almost 6% for ETH 2.0 just for holding it. Under this new proof-of-stake system, token holders actively participate in transaction validation by locking their coins in nodes on the network that then vie for a chance to verify transactions, create new blocks, and receive the rewards that come along with it. Data from staking rewards shows that a stake of 10 Ether currently results in a weekly earning of 0.0075 ETH, or $17.96 at current prices, and a yearly of almost $1,000. So that's just for holding. So the staking rewards vary depending on where and who you're staking with. So not all will get you 6%. Some are higher, some are lower, but that's actually a good middle ballpark, because for some of these they can get up to like 12%. The yield percentage for Ether decreases as more tokens are locked on the network, so the final earnings may change. Currently, the top 5 crypto assets by staked value are Cardano's ADA, Ether, Solana, USDC, and Polkadot. All things considered, staking provides one of the best low-risk opportunities in crypto to gain a bigger stack regardless of market sentiment or performance, while also helping to support the network through transaction validation. So I can vouch for USDC being a top item, just because I just talked to a friend of mine the other day, and he's getting 12% on USDC with crypto.com. So you can't get that nowhere else. So he's holding USDC. I think I should start holding more USDC. And then with ADA, I do hold some ADA and make money off holding, but I pool my ADA. So we'll see if they separate pooling into a different section here, but it's pretty much the same thing. So you can lend crypto for low risk yields. The growth of the DeFi sector led to the development of a diverse crypto lending ecosystem where users can deposit their cryptocurrencies to various lending protocols in exchange for rewards in the underlying token or different assets like Bitcoin, Ether, and various altcoins. Aave is the top lending protocol at the moment, and the platform offers yield opportunities for tokens on the Ethereum and Polygon network with its native coin, Matic. So market size is 160 million.
Hear that music?
With 63 million of it being borrowed. And the deposit return is 1.92%, and the borrow return is 6.1%. So I don't know much about Aave. I don't hold Aave, but that's just the example given here. The chart above shows the top 7 leading protocols. Top 7 lending pools available through the Aave protocol on Polygon, and rewards are paid in wrapped Matic, with the current deposit annual percentage being 1.92% and a yearly estimated APY of 6.1%. Other top lending protocols include Curve, Compound, Maker, and Yearn Finance. Lending offers another low-risk way to earn a decent yield in both bull and bear markets on tokens that don't offer user-controlled rewards like staking. So, if you want to check out lending, I would recommend Kucoin. Getting familiar with Kucoin. Kucoin is set up in a pretty user-friendly way. You can go in, purchase whichever assets you're interested in lending, move them over into the lending section of your account, and then choose a rate that you want to lend it out at. So that's the easiest way I can think of to get into lending, if that's what you want to do. Again, not financial advice, just here to bring the news. Earn fees and tokens from providing liquidity. So liquidity pools. Liquidity provision is one of the primary components of a DeFi platform, and investors who choose to provide funds to emerging platforms are often rewarded with high percentage returns on the amount staked, as well as a percentage of the fees generated by transactions within the pool. As seen in the image above, providing liquidity to an Ether USDC pool on QuickSwap will entitle an investor with a percentage of the 23,000 in total daily distributed rewards and a fee APY of 33.81%. Blanked out there. Ideally, long-term investors would be wise to research the available pools on the market, and if any liquidity pair comprised of solid projects or even stablecoin pairs such as USDC Tether looks appealing, as it has the potential to be blockchain version of a savings account that offers far better yields than can currently be found in any bank or legacy financial institution. That's true. So they got that leg up. You cannot, these returns, no bank is giving you, I shouldn't say no bank, but the average, for us average folks, banks ain't giving you 12% returns on holding your money. My bank right now, if I asked them for 6%, they'd be like, what? That's not happening. So in crypto, you can get a bunch of returns, and that's one of the ways that is going to help drive people into this market. People are going to want to get returns on their savings, because some folks grew up in an era where saving was the way to make it. So what better way to bring people over than to offer them returns for holding their funds?
Still fresh.
Maximize returns by yield farming. So yield farming is the concept of putting crypto assets to work in a way that generates the highest yield possible while minimizing risk. As new platforms and protocols emerge, they offer high incentives to depositors as a way of mining for liquidity and increasing the total value locked on the protocol. So this is a Dino swap is what's given in the example here. So the high yields offered are generally paid out in the native token of the platform as seen above, where a user has deposited a liquidity pool token for a trading pair, which has an APR of 189.2% and has so far generated a reward of 3.3 Dino. For long investors who hold a portfolio filled with an assortment of tokens, yield farming is a way to gain exposure to new projects and obtain new tokens without having to spend new funds. So man, that's a lot. An APR of 189.2% for providing liquidity. That's wild. So some of these do pay out in their same tokens. Right now, one of the tokens that I pool with is ZIL. Again, not financial advice, just using this as an example, but ZIL is one of the ones that I use, and they pay you back in ZIL, so their native token. And I think on ZIL right now I'm getting like 12%. I need to go do some more research on yield farm and figure out what I need to do to get this 189.2%, if that's a real figure, because my goodness, talk about doubling your money. NFTs and blockchain gaming, they make a play to earn. They are making play to earn a reality. So Decentraland, one of the things I've been talking about is you can get paid to play some of these VR games. They will actually pay you to play them for hours on a day. You work, basically it's like working a shift. I don't know the total ends. That's one thing I'm gonna be making a full Decentraland video once I figure something out or have more of an example of what people are actually doing in Decentraland. I don't play it, so that's why I don't have a live example for you right now. But yeah, blockchain gaming and NFT collecting is another way to produce a return on a crypto portfolio without spending new funds. So Axie Infinity is the most popular example at the moment, and the in-game play involves trading, battling, collecting, and breeding NFT-based creatures known as Axies. So playing Axie Infinity generates rewards in the form of Smooth Love Potion, or SLP, an in-game token that's used in the Axie breeding process and also trades on major cryptocurrency exchanges. Users can swap SLP for dollar-based stablecoins or other large-cap cryptocurrencies. That's just weird. But hey, it's paying you to play. So essentially what you do is you're getting paid in SLP, right? And if you actually want to be able to use that money that you made, you need to go and convert it to USDC or whatever your native stablecoin is, or whatever source that you're trying to buy product from, whatever version of crypto they accept. You just need to convert it into that version of currency and then spend it, buy it. So according to data from your crypto library, today the average player earns between 150 to 200 SLP per day, which at current market value is worth between $40 and $53. So it's an extra 50 bucks a day. So an extra 50 bucks a day help if y'all got people who are into, I believe Axie Infinity, don't quote me on it, I believe it's an Android game. We're gonna go off script here, y'all. Hold on, let me see if I can get their website up. We going off script. We are going off script. Sometimes we find good stuff and go off script. But this should just be a good example.
is a digital pet community where players can sell their in-game characters for real money using the Ethereum blockchain. Players can breed their Axies to discover exciting new combinations. Axies start off as eggs and require love and attention from their owners to grow up.
I don't know if I could use this video or not because it's got music in the background, but I gave them a like. Hopefully they'll leave your boy alone, but I don't know. We'll see.
Take care of your Axies and earn experience points by completing daily activities.
Okay, so it's one of those mobile games where you breed the creatures and they battle and... Okay. So now y'all know.
Points to level up your
now y'all know. Use experience for the... Okay, so now y'all know. That's what Axie Infinity is. So you can earn money by playing Axie Infinity. So check again. I'm pretty sure it looks like a mobile platform game. I could be completely wrong, but... that's an example of ways people can make money playing games in crypto. So in some parts of the world, that amounts to the income provided by a full-time job. For this reason, Axie Infinity has seen a massive uptick in user activity in new accounts in countries like Venezuela and Malaysia. Crypto investing, lending, staking, and play-to-earn blockchain games provide a much higher return on investment than traditional banks offer on savings and checking accounts. As the blockchain sector grows, it's likely that investors will continue to flock to platforms that offer high yields for engaging with the protocol. So yeah, want more information about trading and investing in crypto markets? That's not what we're here for. But yeah, so again, Axie Infinity is another way you can get paid to play. And people like money. So getting into our last article, sorry that dragged on a little bit, but I know I got off script. But I wanted to at least try to break down something in that article that I could for you. Some of the things about, if you want to know more about yield farming, there is a pretty good video on YouTube about yield farming if you want to get into the technicals of it and you want more than just that overview that we did here. There's a video called What is Yield Farming? I'll leave it in the link to in the description box. The guy's got a little bit of an accent, so you know, be an adult, try to understand. But it's good content, and he does it visually to help explain things pretty well. So shout out to him. I don't know him, but the video seemed pretty decent when I was looking for one that I can use as an example for people. So like I said, last article, Coca-Cola officially gets into NFTs for charity. So each NFT was created to celebrate elements that are core to the Coca-Cola brand, reinterpreted for a virtual world in new and exciting ways. So Coca-Cola is now making stuff for this virtual push. Look at that, they popped the can lid and crypto came out. I don't know. Somebody in the comments explain that one for me. I got nothing right now, y'all. Nothing. One of the most recognizable brand names in the world is planning to release a collection of non-fungible tokens to raise money for Special Olympics International. Well, that's always charities that people use. Anyway, the OpenSea Marketplace will be holding a 3-day auction for Coca-Cola branded non-fungible tokens, or NFTs, starting on July 30th. The NFT collection, created in partnership with digital designer Taffy, were inspired by video game loot boxes and contain hidden surprises available only to those who purchase the artwork. The friendship boxes feature a classic. Who wrote this? Shout out to Turner Wright, man. What in the world? The friendship boxes feature a classic Coca-Cola cooler, a wearable bubble jacket, which can be used in the Ethereum-based virtual reality world Decentraland, a friendship card, and a sound visualizer which plays audio from a bottle opening. a beverage being poured over ice, and the fizz sound common to carbonated beverages. Soft drink enthusiasts can place their bids in Ether through OpenSea until August 2nd. So that's over already. A few days late on this article. So that's basically a quote, the quote that we started the article off with. The soft drink manufacturer said it would donate the proceeds from the auction to Special Olympics International, a sports organization aimed at ending discrimination against people with intellectual disabilities. The opening bid for the auction was not available at the time of publication. And the last blurb, though the popular beverage producer has rarely, if ever, been directly involved in the crypto and blockchain space, some of Coca-Cola's bottling partners use decentralized ledger technology for supply chain management. Crypto reported in August that New Zealanders and Australians had the choice of purchasing the famous carbonated drink and others using crypto through a partnership between digital asset platform Centrapay and Coca-Cola Amatil.
Hear that music?
Well, they're involved in it now. And the fact that they got these NFTs cracking already, I'm going to guess they knew something about it before then. So, just my opinion. Anyway, that sums it up for us today, y'all. So y'all can see this stuff is moving very, very fast. Again, the meat and potatoes of the video, the 5 ways to earn crypto, make sure you go back and check that link that's in the description. Read through it. There's a bunch of different ways. You don't have to try to do everything at once, but there's ways that you can inch your way into it. If you play games, if you like mobile games, there's a way you can inch your way into it. You can learn how to deal with the crypto after making it, playing these games. That way there's no risk to your initial funds, your current funds right now. If you just like to buy and hodl, you don't like to trade, you're more familiar with stocks and that kind of thing. Not financial advice, but you can just, you can purchase and hodl and hold them on platforms that give you a high rate of return. And you don't have to necessarily trust the exchanges. There's all kinds of web wallets that you can use that give you returns too. They mentioned ADA. Uri is one of the wallets you can use for ADA. And pool it and get a return from providing liquidity to a pool. There's things like VeChain. You can hold VeChain in different wallets, and they pay you back in VThor. You can do that on the exchange or in a wallet. So there's a bunch of different ways to be able to make some money off crypto without trying to chase the big bang bucks. It's still early in the space, so your hodl bags are your hodl bags. Whatever those consist of. And until next time, I'll just leave y'all with a little Decentraland trailer from Upload VR, who does a lot of videos on virtual reality. Shout out to them. Hopefully they don't get mad at me for this video snap, but it was a nice trailer, and I think it explained Decentraland better than the other trailers that I've seen out there. So until next time, y'all, don't get shook, stay focused. I'm out.
What if you could own the virtual world? Create, develop, and trade without limits. Make genuine connections and earn real money. Decentraland, a fully immersive platform powered by the blockchain. Buy land. Design your experience. And transform the way people see the world. Purchase the first ever virtual real estate. Get started today.